Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the boys from Convoy, Dustin and Jonathan. How you guys doing?
Good. How are you?
I'm doing well. So a lot of great conversations. Our first conversation with Dustin was about the economy, the Fed, a recession, depression, all that cool stuff. Second video, we talked about this amazing second product that you are just about to announce, August 1, August 8th, right around the corner, building pipeline for you guys there. Now I want to talk about just what is going on in the market. The mortgage market is crazy. Conventional rates are falling. New loan products are coming because the mortgage industry is seeing a lot less transactions. So people are getting creative. So I'm just curious, what are the most common or popular loan products today that Convoy is seeing?
I mean, we've been doing, obviously, since the time we've been on, most of our business is for investment properties or investors.
Mm-hmm.
The most popular product, hands down, right now is our DSCR product because, well, number one, there's no income being used because we're using the cash flow of the property. And number two, like trying to get qualified now, going conventional or full doc with where rates are at for an investment property, because you got to keep in mind the debt to income ratios when you're going conventional are a lot lower on an investment than a primary.
Mm-hmm.
When rates are, in the sixes, trying to get your DTI down to 43% is very difficult. So most common, most popular for sure, hands down, is our debt service coverage ratio loan, the DSCR loan, right? There's no income required, just got to find the right deal. I keep telling people, find the right deal. Don't just get it because you can get it.
Yeah,
But
folks, only great deals today. We're not doing good deals. Good deals left the building. We're only doing great deals, please.
Exactly. And it's harder to find, obviously, because the payment's going to be higher with the higher rate, but there are a lot of clients that we're running into that are getting DSCRs over 2 still when the rate's at 6.5% because they're going out.
Again, folks, I want people to realize I'm now calling a housing depression. It's going to cause the economy to have a recession, but investors, we don't care about the interest rate. It is one variable on a big old spreadsheet. Put it in at 9. Who cares? That just tells you what you can pay, how much you can put down. Just get better deals. I know the market is shifting today. The market will continue to shift for quarters. This is a slow process. Learn your market, do the work. Great deals are out there. You may not find them today. You may not find them tomorrow, but they are out there. This could be 6-8 quarters. So just keep doing the work.
With, like your hat says, which I love, by the way. In the DSCR program, obviously, if you're kind of curious on getting another perspective on a quote you already have or something, reach out to us because we have a lot of different lenders with a lot of different pricing. So, definitely check it out. I think in terms of also, we talked kind of a little bit about the spread between the rates of conventional investment versus DSCR or some non-QM investments. It's still not that big. I mean, it's maybe at most a point difference because conventional investment properties are still in like the 6s, 6.25, 6, half for some of them 7. It depends on what you're doing, but like it's still there. So, another very popular non-QM product that has an even smaller gap than DSCRs are, bank statement programs. If you're self-employed, it's a no-brainer, but we want to clarify it's for self-employed people, right? So whether it be you're running a business for real estate, or whether you're running a business for, let's say a laundromat or whatever, if you're W-2, employed by someone getting a paycheck and that's your single source of income, we can't really go bank statement program because you're not self-employed. So have to make sure that we are only dealing with self-employed people for bank statement programs. It does allow for slightly better rate than a DSCR if it qualifies, but it's also the 40-year fixed with interest only. All of that is still available on the bank statement program. So you don't have to go DSCR in order to get that, but it does allow us a little more flexibility in terms of, qualifying for the income and a little bit lower on the rate potentially.
Yeah, something I wanted to ask you guys again, because you brought the 40-year mortgage to my channel. Gosh, what was that, 6-9 months ago? What is the percentage, and a complete guess is okay, what percentage of the ORAT family that's come to you chose 40 versus 30? Is it 80-20, 50-50? Any guesses?
70-30 maybe?
Yeah. Because here's the thing that we always preface on. So it's not like the interest only, I'd say 90%. right?
Okay.
But the reason we try to get the client to go interest only is
Mhm.
because they can get a better deal when we run the debt coverage. Now, sure, the payment may only be on a small loan, 150, $250 difference.
But that makes a difference. Yeah.
When we go into underwriting and you're going interest only, we get to use the interest only portion as the
Yes.
denominator in the calculation.
Exactly.
So, if the client really wants a 30-year fix, I'm like, look, just go with the 30-year interest only,
Mhm.
set your loan payment on auto pay.
Yeah. Yeah. Cause I can tell you the number, right? It has to be this.
This is what the 30-year fixed payment will be, but I will get you a rate that's 0.5% better because now debt covers positively.
Yeah. This is why you have to work with professionals, right? The professional is, and again, because you're coming from ORAT, one of these two guys is going to talk to you and they're going to tell you the whole story. They're going to say, hey, I can get you a better interest rate if you choose this loan, but let me give you the full payment, which if you choose to pay, that's on you. That is so wonderful that because you don't have to do that. That is extra work for you. So the fact that you do that for one rental at a time, people, is pretty cool. So thank you.
Yeah, absolutely. And then
So,
also,
but one question, you said 70-30, but I don't know which way it was. 70% 30, 30% 40, or the other way.
I'd say 70% 40, 30% 40.
Okay. I didn't know. All right.
30,
30%,
30% 30.
Okay. That's, I just didn't know.
Yeah. I mean, it's interesting just because, like Dustin said, the interest only portion, but a lot of our lenders too will allow for, even if there is a prepayment penalty, which we've touched on multiple times, they'll allow for a 20% principal pay down on an annual basis.
Yeah, nobody's
triggering that. Yeah. So it's like, even if you pay the principal payment that you were supposed to pay, like Dustin was describing, you're not going to trigger that prepayment penalty. It's still going to allow you to do it without the worry of that happening.
Yeah, exactly. Exactly.
Yeah. So that's there. And then, I mean, obviously, like we are alluding to and always talking about, like on the last video and everything, I think a really popular program, like you said, is going to be that second mortgage that comes out that's not based on full doc.
Dude, again, there's millions of people. Again, Black Knight's the source. 13% of residential loans, which is where you're playing with the second, have a 2 on it. A 2. 50% or 3.5, and 80% or below 4. I have some of those loans. I will never refi those loans. But you give me a second to my 50% equity, now we can have a conversation. I think that's amazing.
Exactly. And I mean, we are also, I mean, we just got a notification that it's probably going to be rolled out next Monday. I sent a little quick email and I was like, hey, when are we getting this? And it looks like they're finalizing it. We might get it next Monday. So
next Monday is August 1st or 2nd?
Wait till we fully announce it before they start blowing us up.
Yeah.
But yeah, John.
No, I don't wait. I'm in sales. We don't wait. If you are from the ORAT family, you need to email these guys today if you have interest in this, private client at Convoy Home Loans, to get in the queue. Realize they don't have all the answers yet. They're going to play softball because they want to underpromise and overcommit.
Yeah.
Not my problem. Not my problem. That's your problem. Fill them up today. Get in the queue. Once it's done, it's done. Then they can start talking to you. So again,
exactly.
Get in the queue now. It'll be Monday. It may be the 8th. Who cares? Get in the queue.
Yeah, that's going to be a super popular program. I think it's just,
no doubt.
No doubt. Yeah.
No doubt.
It's filling a huge need, but I mean, that's pretty much the most popular programs right now for qualifying on non-QM, or I would say.
So another question I have, just again, because I hope the ORAT family is definitely buy and hold. I'm hoping this is near zero, but it might not be. Do I have any flippers coming to you from over one rental at a time, trying to get 1-year loans or, stuff like that?
We should have talked about that more on our previous videos, or even we can do it now or next.
Go for
week.
it. Yeah,
we're doing a lot of fix and flips and a lot
really?
of
Okay.
So
what does a fix and flip program look like? We can do more next week, but what's it look like?
Very simple. It's a product that allows somebody to obviously buy a home on a short-term note and get the rehab.
Let's be very clear. So we talking 6, 12, 8, what's short term?
12 to 24 months.
Okay.
Right. Interest only.
Okay.
There's no prepayment penalty. You're going to essentially we'll do the math super quick and easy. $100,000 home. You're putting 20% down. The first loan is 80,000, right?
Correct.
If you have all of the rehab that you want to do yourself, great. But most of our clients are asking for rehab money as well.
Okay.
So this client hypothetically wants 60,000 in rehab.
Okay.
We'll fund the rehab, but we're going to put it in an escrow account, right? So
Yeah.
he doesn't get it at closing. And, you know, he uses the 60,000 in rehab from us. And then in 2 years, he either sells it for 220 or he refis into a new loan.
Okay.
Right. So
yeah. So let's talk about that product on our next episode. Cause again, I think there will be opportunities. It's funny. What my real estate entrepreneur Omar on Tuesdays, a year, maybe 18 months ago, we said it's the best time ever to do fix and flip. And we did a lot of them. He did more than me. But I did a lot of them. And now it's harder. Not that it's impossible. You just you gotta lower your ARV. A lot of you are doing 70, 75% of ARV. Get lower, be more creative. You got to buy better. But there'll be plenty of opportunities to, burr or flip. It's going to be harder. There'll be a lot of busted projects because, again, a lot of people got started and rates went up and got them. But it's not impossible. So it's good to know you guys have that product.
Yeah. And I mean, it's something that we do ourselves, right? Like I'm about to work on one, not a flip, but, more of like a fix and hold, but kind of like acquire on a bridge and do the rehab, finance it all, and then kind of buy it into a longer term loan, which is, I mean, not a bad idea.
I got to know, Jonathan, what price point are we talking at? You look like a baller with these very expensive suits.
I'm not. It's in Anaheim.
Okay.
It's worth like $950, but I'm getting it for like actually $650 to $700.
Okay.
So
well, that makes sense.
Huge discount. Yeah.
So this will be a buy and hold rental, or what are we doing? We can stick mom in there. Okay, rental.
Yeah.
There you go.
I like it. Has a house. Yeah.
Very cool, man. I appreciate you guys. You guys are doing great things. Again, folks, get in line. I suspect the second product that knock on wood will be announced on the 1st, maybe the 8th. Get in line today. Private client at Convoy Home Loans. Tell them you came from ORAT, and one of these two great guys will take care of you. Thanks, man.
Thank you.
Mm-hmm.